Good morning, traders, and welcome to BCI's morning market analysis, where we have a look at the major moves across the US dollar, crude oil, gold, and the Australian dollar. First up, let's talk a bit about the US dollar, the DXY, which held above 99.4 on Monday, extending its second week of declines. Markets remain cautious as the backlog of economic data following the US government's reopening could reveal signs of slowing momentum in the economy. This softer backdrop has supported non-dollar currencies, even as Fed officials like Musalim and Hammock emphasized on ongoing inflation risks and hinted that rates may stay higher for longer. Despite that hawkish tone, the dollar hasn't really gained any traction with data releases paused and policy signals. The market remains unsure about the longer term trend. Technically, the index is still consolidating, moving within a 98.58 to 99.74 range. The 14-day RSI, slightly above 50, reinforces the lack of clear direction. Support levels sit at 99.1 and the 50-day SMA at 98.58, while resistance is seen at 99.74 and the psychological level of 100. Next up, let's have a look at WTI crude oil, which traded around 59.6 after last week's sharp rebound driven by geopolitical tensions. The Ukrainian drone strike in Russia that disrupted operations on a site which handles 2.2 million barrels per day, which is about 2% of global supply. It significantly heightened concerns about supply security. Sanctions targeting Russian producers such as Lukoil and Rosneft added further uncertainty to export flows. At the same time, a rise in US oil rigs suggests that there's potential for future output growth, which could moderate additional price gains. Technically, crude remains in a broader downtrend from 66.19, which is the September high, forming a clear descending channel of lower highs and lower lows. Key support remains at 58.12 and 55.97, while upward momentum would require a firm break above the psychological level of $60. Next up, let's have a look at gold, which traded around $4,050 during the US session. Prices eased from last week's high as hawkish Fed commentary cut the probability of a December rate cut roughly in half. Even so, geopolitical risks, including US military posturing towards Venezuela, may continue to provide some underlying support. Gold has also recently pulled back from the 4,200, 4,250 resistance zone and remains far from last month's 4,381 record high. The RSI sits near 50, suggesting fading momentum after a volatile week defined by Fed uncertainty and a data vacuum due to the US government shutdown. Support stands at $4,000, which is a psychological level where a recovery would need to clear $4,078 and then the psychological level of $4,100. Lastly, let's have a look at the Australian dollar, which slipped back under 65 cents, reversing part of last week's strength as the US dollar regained footing. Markets drastically cut expectations of a December Fed rate cut from around 88% to 46%, and Australian rate cut expectations also softened. Strong employment data has pushed out RBA easing risk, with the probability of a May 2026 cut dropping from nearly 70% to around 44%. Technically, the Australian dollar remains in a consolidative range. The 14-day RSI around 46 to 48 signals ongoing sideways momentum. Resistance sits at the 50-day SMA at 65.58. Support is seen at 64.80 and the 4-month low of 64.14. Well, that's all for today's morning market analysis. Stay sharp, stay disciplined, and have a productive trading session ahead. As always, happy trading.